What's up, guys? Your boy Quick Stocks is back. As always, remember to hit those thumbs to recharge my dopamine, and we will get right into your quick stock analysis of Pump the Brakes. Today's video is going to be a bit different. Today, I'm going to teach you the secret to becoming a stock market millionaire. And obviously the title is a fallacy. There's no one-size-fits-all investment strategy. But I promise, this holds its merit. And you may be thinking to yourself, yeah, okay, Captain, there's 1,001 people preaching 1,001 different investing strategies. Why should I listen to you? Disclaimer, you probably shouldn't. Do not take financial advice from people here on YouTube, including me. But when I become a billionaire, baby, I'm definitely going to tell you I told you so. But seriously, what I'm about to teach you is the backbone of my investing strategy. And it's made me a lot of money, man. Sadly, it's been overlooked by my peers who've become addicted to that quick dopamine fix. Myself included. Seriously, man, hit those thumbs, bro. What if I told you there was an investing strategy that only requires a very basic understanding of the financial world, in which you can rest easy knowing you'll outperform a majority of your friends, real estate, collectibles, bonds, precious metals, all on a historic average? Obviously, there's exceptions. I'm looking at you, early Bitcoin adapters and party hat hoarders and first edition Charizard hoarders. Or have you ever considered owning shares of Microsoft, Apple, Amazon, Google, Facebook, Intel, Netflix, Pepsi, Costco, Nvidia, PayPal, Charter? Alright, maybe not Charter, but Tesla, Starbucks, Qualcomm, and the list goes on. In case you haven't caught on yet, I'm talking about the NASDAQ 100. Wait, don't tune me out yet. If you are young enough and believe in the long-term growth of large and mid-cap tech companies and consistently make small contributions into the NASDAQ 100, historically speaking, you will become very wealthy. And people are going to look at you like you're some kind of investing guru. And the icing on the cake, you can also receive a small dividends, which leads me to the point on how you can buy into the NASDAQ 100. Our quick stock recommendation is actually an ETF. Inside your brokerage, you'll find it under the ticker QQQ, or how I'll be referring to it from here on out is Triple Q. If you invest Triple Q into a vehicle such as a Roth IRA, shameless plug, you can check out some old school quick stock footage about Roth IRAs here. But for real, just to give you an example of how powerful the NASDAQ 100 can be in your financial success, if we had a participant that we will call Billionaire Bobby, if Billionaire Bobby would have invested $2,000 yearly into the NASDAQ 100 for the last 10 years, in which we stated has seen on average a 17% annual rate of return, Billionaire Bobby would have nearly $52,000, which is great. But Billionaire Bobby wants more. Let's say Billionaire Bobby was 20 years old when he started investing the $2,000 a year into the NASDAQ 100, which means he is currently 30 years old. So let's assume Billionaire Bobby wants to retire at the age of 60. He just leaves his money into the NASDAQ 100 and lets the interest compound without adding any additional money. Assuming the same 17% compound annual interest, which I'm not a psychic, I don't know what the market's going to do tomorrow, let alone 30 years from now. To margin closer to reality, I'd assume around a 12% rate of return. But for entertainment purposes and following the historical data, let's assume tech companies continue to grow at the same rate of 17% yearly. Our boy, Billionaire Bobby, would have $5.7 million at retirement, excluding any other investments he may have made. Just to put this into perspective, Billionaire Bobby only invested $20,000 of his own money and now has $5.7 million, which, if he put into his Roth IRA, is tax-free, baby. Obviously, if you like being an active trader and researching companies, I'm right there with you. But the power and simplicity of the NASDAQ 100 really shouldn't be taken lightly, especially for beginners. And I'm going to regret even bringing this up, but I'm sure if some of y'all start looking into Triple Q, you'll stumble across TQQQ, ticker symbol TQQQ, which is triple leveraged Triple Q. And you'll notice it's well outperformed some of your favorite companies like Microsoft, Apple, Amazon, Alibaba, etc. And you're going to think to yourself, damn son, I'm selling my Tesla and I'm going all in on TQQQ. First of all, please don't, and that's why I shouldn't even bring this up, because I know damn well someone out there will. I've seen some of y'all's crazy portfolio. TQQQ is for people who are extremely bullish on large and mid-cap tech companies, the same companies inside the regular Triple Q. The difference is TQQQ uses leverage to try and 3x the NASDAQ 100's already great returns. But seriously, I can't say this enough. Please don't max out your account with TQQQ. And financially speaking, most average traders have no business playing with leveraging or options. But for experienced investors who can stomach the risk, it is an interesting option nonetheless. But back to reality. No, I'm kidding. I'll spare y'all. But I do think it is important to note here at Quick Stocks, we are all about rebalancing your portfolio yearly, which you lose the ability to do if your entire portfolio is made up of large ETF tech companies. If you were looking for a diversified ETF, I would recommend something like a Vanguard S&P 500. But let's be honest, the majority of investors our age aren't diversifying. I'm not saying it's a good financial move, but it's the truth. But I've seen a lot of y'all's portfolios. Your entire portfolio is Tesla or Snapchat. Man, y'all got some big balls. And don't get it twisted, here at Quick Stocks, we love those companies and have a decent sized investment in both of them. But QQQ is far less risky than putting all of your eggs into a single tech company, and historically speaking will outperform your single spec play with far less risk. It may not be sexy flexing to your homies that you made all your money by investing in the ETF, but you gotta decide what's more important to you, owning a company you can flex or long-term capital gains, which is a fallacy itself because when you own QQQ, you have a position in most of the companies you would like to flex, i.e. Tesla. Anyways, if you want more information about the NASDAQ 100, I actually made a video pushing it a month and a half ago in which you would have already made 32% profit had you bought in at that time. But for real, it potentially does a better analysis of QQQ. Once again, the format has changed a bit since then, but it has some gems in it, I promise. Anyways, guys, this was your reporter Quick Stock. As always, the best investment you can make is to go long on Quick Stock. Hit that subscribe button now at 128 subscribers and plan to retire early. Snap back to reality. Oh, there goes gravity. Why can't they see the bigger picture? Man, it ain't blurry. They giving the money away like Bernie. They trying to make that million a hurry. They want to snag a Ferrari, yet the foundation ain't sturdy. No time to listen to the boy Quick Stock's theory. They too busy sucking that dopamine away like Kirby, busting they ass like Mari. Oh, come and resurrect these fools, mercy. Lost all their money before they realized they've been done dirty. By then it's too late because they thought they didn't have time to play the slow game. What I'm trying to say is, dollar cost averaging the NASDAQ 100 will make you richer than you could have imagined in due time. Yo, you better lose yourself in the NASDAQ the moment you own it. You better never let it go. Give your greedy ego a death blow. You made a million your downtime, but I ain't talking 2-day prime. This takes a long time. I may not have the flow, but I hope you felt my rhyme. Ugh, I'm gonna lose a lot of subscribers this video.